Welcome to Explain the Charts. Today we're breaking down the USDJPY and not only looking at the current market data, but also discussing recent events that are impacting price action. First, let's discuss the news. Current events and economic headlines suggest that the USD is currently strong against most major currencies, including the JPY. The Fed's recent announcement of a slower pace of easing, coupled with concerns about increased deficit spending after the U.S. presidential election, are supporting the USD. On the other hand, the Japanese yen is being pressured by uncertainty surrounding the Bank of Japan's, BOJ, plans for a rate hike. The BOJ's current ultra-loose monetary policy is hindering the yen's appreciation, and investors are looking for signs of a potential shift in the BOJ's stance. While the yen is weakening, some analysts believe it could rebound if the BOJ indicates a move towards ending its ultra-loose monetary policy. Now, let's look at the charts. If we switch to the daily chart, we can see that the USDJPY has been on a strong rally since mid-September, gaining over 1,000 pips. This bullish trend is supported by the widening yield spread between the US and Japan. The recent breach of the 150 level, a major resistance zone that held in Q4 of the past 2 years, is a significant event. However, this rally has been fueled by the US dollar's strength, not necessarily by weakness in the yen. Therefore, it's crucial to monitor the USD's strength and look for any signs of a potential reversal in this trend. Zooming in on the 1-hour chart provides more detail on the recent price action. The USDJPY has been trading above the 151 level for several hours, but it's been fluctuating around this mark. There are some potential support levels around 150.70 to 150.80, and resistance is expected at 151.20 to 151.30. This suggests that the market may be consolidating before making a major move in either direction. It's crucial to watch for price signals and consider directional risks in the coming hours. Let's compare the 15-minute chart to the 1-hour chart. The 15-minute chart shows that the USDJPY has been trading in a tight range, with the price oscillating between 150.90 and 151.10. This consolidation suggests that the market is uncertain about the direction of the next move. This narrow range is likely a result of the tug-of-war between the bullish sentiment driven by the strong USD and potential intervention fears, keeping the yen from weakening further. Traders should be aware of this volatility and monitor price signals closely for any breakouts or breakdowns. Overall, the USDJPY is currently in a state of flux. While the USD's strength is supporting the bullish sentiment, the potential for the BOJ to change its monetary policy and intervene in the market could trigger a reversal. It's crucial to stay informed about economic developments, particularly those related to the Fed and the BOJ, and monitor the charts for any signs of a breakout or breakdown. Looking at a longer time frame, we can see that the USDJPY has been trending higher in recent years, and this trend is likely to continue in the long term. However, short-term volatility is expected due to the current uncertainty. Traders should be prepared for potential reversals and adjust their trading strategies accordingly. To sum it up, here are some of the important price levels to watch: the 151 resistance level, the 150.70 to 150.80 support level, and the 151.20 to 151.30 resistance level. There is a high likelihood of a breakout or breakdown in the short term, and it's important to monitor the market closely for any signs of a change in the trend. The USD's strength is the main driver of the current rally, so any signs of a reversal in the USD's strength could lead to a significant decline in the USDJPY. The BOJ's stance on monetary policy and the potential for intervention are also important factors to consider. If the BOJ indicates a move towards ending its ultra-loose monetary policy, or if there are signs of government intervention to support the yen, it could trigger a sharp decline in the USDJPY. Ultimately, the key is to stay informed, analyze the charts carefully, and be prepared for potential surprises in the market.